Interest rates are at historic lows. That means mortgage rates are at historic lows. Should you refinance to a 15-year loan or a 30-year loan? I'm going to help you make that great pivotal decision right now. My name's Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Cohorn Financial Group. If you're new to this channel, hit that subscribe button because every single business day I'm coming to you with a next wise step, an action item that you need to take in your financial life, typically related to what is going on in the world of finance. So hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so interest rates are at historic lows. I actually thought mortgage rates would be a little bit lower by now, but still, this is still the cheapest, the lowest interest rate we're likely going to see and likely you've ever seen in your life. We've got 15-year loans around 2.75%, and we've got 30-year loans around 3.25%. And of course, those interest rates change every single day. They could get a little bit lower if the Federal Reserve enacts something called yield curve control, but as of now, they've been stiff-arming that idea. So what do? You've got a mortgage. Today's interest rates are lower than what you have, and you look and you say, well, what's the best option here? Do I go with a 15-year loan? Do I refinance to a 15-year? Or do I go with a 30-year? Maybe you're buying a house and you've got a decision to make. Do I go with a 15-year or a 30-year? I'm going to make it really, really simple. Here's when you would go with a 30-year loan. First and foremost, and this is the one that often leads people to take the 30, is if going with a 15-year loan, if that would increase your payment so much because you're paying, your mortgage payment is higher because you're paying it off faster, if having your payment be that high would infringe on other high priority financial goals. Right? That is the big idea. If doing a 15-year loan would make your payment so high that you have to sacrifice or you're not able to fund some of your other really important financial goals, then you probably need to go with the 30-year loan. The struggle that I see are folks that go with a 15-year loan and they force it. They say, well, in order to get the 15-year loan to work and the higher mortgage payment, that means I'm not able to save the right amount for college for my kids. That's a big goal, but I'll figure that out later. Or I'm not able to save as much for retirement as I want. Or some people say, well, it just means I'm not able to go on that vacation or that trip or buy that next car. But those are all financial goals too. You might say, well, paying my mortgage off in 15 years is a higher priority than those other financial goals that I would sacrifice on. Maybe you've got to make that decision. Don't make that decision blindly. Look at that payment for the 15-year loan, and if you'd have to sacrifice on your other really important financial goals just to make that 15-year loan work, you should probably go with a 30-year loan. That's the number one reason. That's the number one factor for you to decide whether the 15-year loan is the 30-year loan. Can you make the rest of your financial goals fit within a 15-year loan? If you can, you better stinking go with a 15-year loan. Why? Because the interest rate is lower, and over the life of your loan, you're going to be paying less than half of the interest you would with a 30-year loan. There's no question about it. The 15-year loan is better. Unless it means you can't fund the rest of your financial goals. Some of you are thinking, well, wait a second, but if I go with the 15-year loan, I get that paid off, and then I've got an extra 15 years to go after my other financial goals. Yeah, you should consider that, but sometimes, and as my colleague Joshua Gregory taught just a few days ago here on this channel, in order to build wealth, you need cash plus risk plus time. And by waiting 15 years to start funding some of those really important goals, you might have missed out on some serious time that could benefit you in reaching those goals. All right, so that's the number one reason how you'd consider between a 15 and a 30. And if you can't fund the rest of your financial goals, you got to go with the 30. The second reason why you'd want to go with the 30 is if you don't have enough margin in your financial life and your income sources are unstable. And we're all dealing with that a little bit right now. No one's job and no one's income is as secure as it felt 2 years ago. So if that's the case, going with a 15-year loan locks you into a higher payment. And therefore, you don't have as much wiggle room, you don't have as much margin if your income does change or need to be reduced. Sometimes people go with a 30-year loan and still make a higher payment as if they're going to pay it off in 15 years, but they give themselves that much more flexibility that if their cash flow needs to adapt, they can adjust. Guys, this is what I'm doing. I am paying extra on my 30-year loan as if I'm going to have it paid off within 15, but I've kept it at a 30-year loan because up until right now, I've had an unbelievable interest rate, and I've liked that flexibility that if my income needed to change, things wouldn't need to get too tight in my financial life. So those are the two big issues. Can you fund the rest of your financial goals, the rest of your high priority financial goals, and do a 15-year? If you can't, then do a 30. And are your income sources stable enough where you'd still have enough margin if you went with a 15-year loan? If so, do it. If not, go with the 30-year loan. That's really it. I mean, you've got to, basically what that does is it draws that decision about 15-year loan or 30-year loan, it draws it in the context of the rest of your financial life. Because that cash flow is influenced by your protection plan, your insurance, your tax withholdings, your retirement plan, your college plan. It really touches all areas of your financial life. And those two factors that I just shared with you helps you look above just 15 or 30, the interest rate savings, to say, how does this fit in the rest of my financial life? Before I leave you with that, there's two other issues to consider. Should you even refinance in the first place? If you're not going to have this loan in 3 or 4 years, maybe 3 to 5 years, meaning you're going to sell the house, you're going to move, or whatever. If you're not going to have this loan in 3 to 4 to 5 years, you might not want to refinance. Because anytime you refinance, there are closing costs. And if you're getting a lower interest, lower interest rate, that's great. But if the closing costs are too high, that you're only going to be in the house for a couple of years and then you're going to sell or whatever, then you shouldn't refinance and incur those closing costs. And then the second thing, should you refinance? Only if you're getting a significant savings on your interest rate. Normally, I would say a savings of about 1% above improvement to your current interest rate. That can be flexed a little bit depending on the rest of your financial life, depending on how long you're going to be in the house. So there you have it. You've got to capitalize on today's low interest rates, and that leads many people to consider refinancing. Should you do a 15 or a 30? Guys, there is no question. I want you to do the 15-year loan. That is cheaper. That gives you more flexibility in your financial life over your lifetime. However, follow those two tips as to whether you should go with a 15 or whether the 30-year is best. Contact your certified financial planner to help you make that decision. Again, you got to lift your eyes up from just the interest rate in 15 to 30 year and look at how it impacts the rest of your financial life. That is your CFP's job. Contact your certified financial planner. Talk to them about what is the best wise choice for you. If you don't have a CFP or need a second opinion, you can always contact our team at Korhorn Financial Group. Find us online, korhorn.com, or give us a call, 574-247-5898. All right, you're now ready. Go out and take your next wise step in your financial life.